All right, let's take a look at this price action here. Okay, we have here. I'm writing this off as like original consolidation. This little area here. It's pretty messy, I know, but try to stick with me here. So we have an original consolidation here, and exactly at 50. See this here? Price opens and runs up, and then runs up. Now you have, so this here would be considered like reversal if you're thinking about this as coming down, or a continuation from this move all the way up here. Then this was like a retracement, this continuation. So this is a continuation. I'll take this as a continuation, which would be X or continuation. Then you have accumulation, and I dropped all this stuff on already, sorry about that. But you have accumulation, and then you have now accumulation stage occurs right in line with the high here. See that? So it accumulates right at the high, then manipulation starts, and exactly at manipulation at 12 it runs up. Now 12 noon we know can become like a reversal type thing, so we do have price dropping down. That's over here you can see, I know it's messy here, but you can see how it comes down. So people could have been thinking, hey, price is going this way, but then a lot of times during lunch it will just do a retracement. And so we see here where we have so you can be anticipating a reversal. It's 12 noon, price comes up for a retracement or something, or reversal. So price comes up, manipulates, comes down, and drops in the distribution. That's this period from here to here. I got it tight because I want to see this. Okay, you know what, let me just expand it real quick. Okay, so you can see in the distribution period I would have got in here because this is an expansion down. This here is a breaker here, and it expanded down underneath the manipulation and accumulation stage. It expanded down. I would have got in on the fair value gap here, and I would put the stop loss above this breaker. And actually this last is these up close candles here, it would have been up there. And as you see, it came close to it, almost took me out. I would have been scared to death. And then not really, it's just just under keeping emotions under control. But it failed to truly distribute, and then did the next stage did accumulation, and then it did manipulation, ran back up and then shake down and run up. This would have been the right here, this would have been the entry here for a second entry under the manipulation period, with the expectations that it's going to run for these lows here. So another entry would have been entered. At this point on this entry, I would have pulled the stop loss down to here to be just within the wick of this here, because all of these up close candles are touching. This one's a touching, this one's touching. So this is like kind of like, I guess would be like I mean, all across here would be like time distortion and accumulation. And I would have just put it above that, like right here. And I would have pulled it down to here, taking off a little bit, and because of an additional entry was made as well. So that would have just brought down the risk a little bit. And then it ran beautifully, started its distribution a little early, like it does sometimes, and runs down, and would have took profit there. That would have been on just a real quick scalp there. But I would have also, as the price was moving along here, I would have dropped from this is the move here that took out the highs. Let me move this back here now. Okay, so this is the move here that ran up and took the highs out. So this here would have been, these are projections. And we have here, when it got close to around 2.5, it did a retracement, as they say happens often. High probability of that happening. And then after doing that, and it got back in sync with the processes, I saw here I have a sort of reclaimed order block here. It was reclaimed here, reclaimed again here. This one here, or this one is the one that as you see, I got in there after I noticed it happening, for it to continue down to get to the 4. Now remember, when you throw projections out, And it's not just, you don't just say, oh, it's going to definitely hit 4. You see how close it got to 4? What you're looking for with the projections is, after you do the projections, you're looking to see what structure is near that projection that may, you're looking for a PD array near there. But what's the PD array do you see near the 4? Okay, here goes 4, and here goes a low. This low is what is attached to this projection here, because you have the low and then you have the liquidity below the low. So we see that price came to the low right here, to the low, and came down deeper and came very close to the 4. So that's the PDA rating that you would have been looking for. Next, I didn't have, as you see, I didn't have the fib time zone out to see, but I recognized that 13 is, I recognized it really close. It was happening. This was the last pull down, and now it's 13 is 1 o'clock. So now I figured that with it coming down, it came and swept under here. It's 1 o'clock. Lunchtime is over. This can be a time where now prices now can reverse and start going up, changing the state of delivery during the time that you may expect it. Not to say that now it's going to come and now take these highs out and stuff. That's not the point. The point being is that now there's a shift. So this entire accumulation, manipulation, and distribution process, this entire process has played through. And now a new stage up may be happening. It could come up here and return back to like this area here, high, low, higher, high. It can come up to about, what I notice is the lunch range. The lunch range, 12 noon to 1, that range, price can come up to halfway of that and then continue down lower. Depends on what structures are there. But I just want to show this entire beautiful setup. Very lovely, time based. You see the times of shifts, times of things, everything. This is a beautiful markup.